Hello guys, welcome to A Train Parrot. We are starting to see some decent moves on altcoins today. Potentially we could confirm a breakdown on the Bitcoin dominance. I'll pay special attention to that in this video, along with some sneaky moves that I'm starting to see in the order book. On the lower end, we'll talk about those orders, the CBD moving as well. By the end of the video, I'll cover the general markets before pre-market prices and a bunch of news on Bitcoin. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. And we're gonna start the video with the usual. Now is Mr. Crypto, the one that is posting the global M2 is going parabolic, guys. Let's go and buy Bitcoin. Maybe I should be cool as well and I should start posting it. Maybe it's time to join the chimpanzee team. Long-term holders will begin dumping the market once the returns exceed 300%, is saying Axel this morning. Currently, the long-term holders are sitting on an average profit of 215% above their cost basis. We are now in the range between orderly profit taking and a potential long-term holder dump. Let me translate this. Basically, this is saying that in the past 2 to 3 years, we've seen some distribution going on as we approach the 300% level of profits, or slightly beyond that level. At the moment, we are at 200%, so anywhere from here into the 300% or beyond that level, we should be expecting that the long-term holders are gonna start accelerating their profit taking. And CryptoQuant is talking about the weak dollar, strong Bitcoin. This is apparently a time test correlation. This chart highlights periods where the DXY trades below its 365-day moving average. Looking at historical data, it becomes clear that such periods have been highly favorable for Bitcoin. This particular chart is showing specifically the areas where the DXY is below the moving average, the yearly one, meaning that at those times the dollar is in a strong downtrend. You can tell that during this cycle there's been a lot of ups and downs with the dollars, but more or less every time that we are below that moving average, Bitcoin has performed well, found a local top and started looking for new ranges high. You can also tell that the dollar is really underperforming at this stage. It's looking very far from the 365 daily moving average. And this is not alpha about Bitcoin, or maybe it is, but I found it very shocking. The US stock market now has a higher market cap than Europe, China, Hong Kong, Japan, India, United Kingdom, France, Germany, Spain, Italy, Brazil, Mexico, and South Africa combined. That is just ridiculous. We're talking about almost 64 trillion. And just a quick think in here, I will say, what if that was used to pay the debt? What will happen? Of course, hypothetically speaking, it cannot be done, right? And we got Steve here from Crypto Crew University highlighting that July at this time in the cycle tends to be a little bit of a bottoming formation during the summer time in the topping year on Bitcoin. For example, in July 2013, we were finding local tops after a very deep correction of I think a 70% right before shooting back up 1,000 up. Oh, those days were really the days of the actual volatility. In 2017, there was also quite a deep move in here, and in 2021, of course, we went into 28k from 50 something or 60 something. That was also fun. And now we are in the middle of July and we're calling for volatility, but it's a very interesting situation, particularly because we are approaching July without having any move down in the monthly. April, May, June, and July are 4 monthly green candles so far. And if we go into 2021, around June we were bottoming and in July we were recovering. In 2017 it was just that month that had huge volatility. In 2013 again we peaked 3 months before July and we started going down. During July we found the bottom. So in this particular stage now we are kind of upside down with that trend, unless we repeat something similar to 2017 where we were in in an uptrend, but in July was the time where we found the deepest move down right before we go parabolic. The top 3 catalysts at the moment, according to ChatGPT, are these ones, and 2 of them are bullish, starting with BlackRock. IBIT spot ETF rockets past 700,000 Bitcoin accumulated so far. That means that a single fund now controls 3% of the circulating supply. Of course, that is bullish because people perceive this as a caution, as a support for a completely shift in the behavior of Bitcoin, turning more into something like gold. Personally, I miss the days of Bitcoin being a blockchain and actual people using the network and fees increasing. It looked like a healthy network. Nowadays, the transactions are dying. People are trading perpetuals way more than the blockchain, and I'm not necessarily fully sure how that is going to survive in the long run. So personally, I don't see the 8 out of 10 in my opinion. Maybe for short term, medium term, sure. Long term, maybe not that much. Trump Media files for crypto blue chip ETF holding mostly Bitcoin. This is a new ETF that will allocate 75% to BTC, potentially unlocking fresh retail, political driven inflows, and cementing Bitcoin's role as the core asset in the US crypto funds. And a 3 out of 10 this time is bearish, which is something that we've been covering in the channel already. BTC slips below 108k after Trump's new 25% tariffs on key US partners. And if there's something that is currently holding the price, is the fears of this. And for this specific topic, I use the section of looking at general markets to measure the temperature of that sentiment towards that, because everything first impacts general markets and then crypto just reacts to that. And just a very quick reminder that there is tons of scammers all over the place. There are huge organizations around the globe that are targeting you, making you believe that you're being contacted by the influencer that genuinely has interest in you, thanking you for being part of the community, followed by asking you for your private keys, your bank details, pictures of your wife, or whatever way they want to take advantage of you. Since we cannot report so many of them because they multiply like cockroaches really, or rats, whatever, you report 2 and there are 100 new accounts on Twitter targeting all the community constantly, on Telegram, on Instagram, on Discord. It's just impossible. So the best we can do is create awareness, and you know my style is kind of taking the piss. So if you want to be part of this campaign, adopt a scammer, join my Telegram channel, just wait 5 minutes and you're gonna get 5 scammers talking to you, pretending to be myself, using deep fakes, sending pictures of me having a shower to prove that they are me, in which case I encourage you to have some fun. The ultimate goal, as I say, is to be fully aware they exist and that I will never ever send you a private message. If you get one that you think is me, don't even ask me. It will never be me, because that's the best way of protecting you. And if you're thinking, hey, you're going into news, now you're talking about scammers, at what point are you gonna talk about a position? And that's a typical thing that happens in this channel when we are in a squeeze. That means that the price is literally not going anywhere, and then range is becoming narrower, and we are waiting for a decision time. We are not at support, not at resistance. We're just there in the median, and the price doesn't want to do anything, and traders start accumulating, piling up on liquidations on both ends, and then price goes, takes both sides that are too close to the price, and then we see a real move. Once we see a real move, we take positions, we take a long or we take a short. I'll update you in the channel. I don't tend to trade the middle area of the price. Put a Bollinger Band in the price on the 4-hour, daily, weekly, and you're gonna see that we are pretty much sitting in the middle line on any time frame, not allowing us to take advantage of any extreme to get an edge. Even on CME, you can tell that we took both sides already, so there is no alpha from there. We have a CME gap at 96k, so that is a bit too far to use it as alpha. I have updated the Bitcoin status. On the 4-hour, we are closer to support than to resistance, and we have already broken down multiple levels. We are approaching that final level of support at the low end. The CPR model is right above the pivots and below the resistance. Nothing new really. On the daily, the RSI breakout is no longer intact. I'm gonna show you that. We took a bullet yesterday and that has carried on rolling over, losing momentum momentum, reducing on the MACD histogram as well. We'll look into that. On the weekly, yes, last week we confirmed the breakout, but now it's at risk because we could potentially come back to the previous range. So let's go into those charts and let's see what's going on. As you can see, the RSI on the 4-hour is at the 50s, pretty much in the middle of the range. There is a potential for a breakout from 57, or there is a potential of a reset at 43 at this line of support, or a potential breakdown, but definitely within a squeeze that needs to fully define. In terms of price action, retail was calling for this breakout, but the breakout hasn't yet done anything significant. There seems to be a failure, then another breakout, a retest, so it's all over the place, not worth much attention. There is this squeeze with dotted lines that I'm also tracking because it corresponds with the one that I'm seeing as well on the RSI, but if we don't see breakout on 57, there is really no move. Trades I would like to take, for example, is if we come back here at 43 support, that could be a potential great entry to start along. If we go into 72, I'm interested in taking a short, for example. Remember that I use the RSI as the final confirmation. When we get into those extremes, I look into the data and then I build a case and I send it to my Patreon members so they get informed. I always make the announcement public shortly after via Telegram, Instagram and Twitter, and I mention the reasoning as well in the next video that goes live. On the daily, we continue the rolling over. You can see that we were doing highs up until here. We got a bearish divergence and we started doing lower highs, but apart from breaking down here on Monday, we are not following through either with the breakdown, so this could potentially reclaim and still continue up. And the reason I'm saying that is because we still don't lose the top of the range. This is 108 and we're still holding that, so we got a little bit of support there left that could still cause that this double bottom breaks out from this neckline into 120. There is nothing major broken on the daily in terms of price action, so yes, we keep an eye on this breakdown, but the breakdown could also turn into a fake out by now because it hasn't followed through. It hasn't accelerated into the support of 41. That support of 41, it's currently located at 103.5. Remember that yesterday we saw an increase in liquidity around there from the longs that are betting on this breakout. They have the risk at 103. We're gonna see if that's still the king against the liquidity located at 111, which is a great incentive to potentially ignite the double bottom breakout on the daily. You can see that the MACD on the daily now is dropping in momentum slightly in here. That could potentially lead into a bearish cross, but it's a little bit too early to confirm it. Just like it is looking that this breakdown might not follow through with that potential target of going into the 41, which is translating into around 103k. On the weekly, something that I missed on Sunday, and I'm surprised no one mentioned it, is the bullish cross on the stochastic RSI that is fully confirmed. As you can see in my data window, we got a K of 75.98 and a D of 75.53. That means that on Sunday is confirmed. Now we are with the mouth open on the bull cross, and that could lead into another expansion of the RSI into 71 or 77. That's on the weekly time frame with targets potentially 121 and 136 correspondingly, depending on how high we actually get there. And this is a little bit against what we did in the previous cycle. You can tell on the weekly that we have our period of diminishing momentum during the bull market like this. One top, second top, and the third top couldn't manage to hit it, and then we enter into bear market. During this bull market, we're kind of having a top, a second top, and if we manage to get into 71, that now corresponds with 121k, that is a better performing momentum relative to the similar period where we are at the moment on the RSI. If we were to mimic this previous cycle, we should fail to hit that downward sloping trend line, and we should lead into new lower lows, which should look something like this pretty much, but that is literally straight going into a bear market. So definitely there's something off in this market relative to the previous one, and since I'm still bullish, it has to do with the timing of things. I think we are moving faster than the previous cycle, and the institutional adoption, and the ETFs are already having a big stamp in the shape of the cycle. Now, I changed the colors to leverage squeeze. This is version 04. If you have access to my indicators, which you can get via Patreon shop, a link down in the description. Now I have color from green to red, the areas where we should be looking for shorts or longs, to make it easier than just looking at the signals. Signals are extremes that you can use to get alerts, but when looking at the chart, I don't want to be in an overcrowded space with too many longs. You can see that leverage squeeze is pointing at 71 at the moment, and that has definitely contributed to increase the liquidity pools at 103. Open interest percent change oscillator continues on its way to the top, which keeps me away from taking a long in such a crowded environment. Also from the point of view of open interest applying to longs, it tends to be a much better deal when the oscillator is at the low end. For example, in here, looking for these lows, that was a much better opportunity than now seeing it going into the other extreme. So yeah, the liquidity at 103 is increasing, but still cannot compete with what we have on the top end, making it still more attractive despite the fact that we have had multiple breakdowns in a slowdown towards that obvious motivation that there is to go and hit 110, 111. Market maker can keep the price like this, creating an illusion that is gonna take it immediately, and then it trap longs and it takes a different path and it goes and takes 103 and then it goes for 111. So be prepared for this sort of U-turns. Don't just look at the liquidity pools and be the typical Joe that thinks, oh yeah, it's red here, let's just put a huge massive position pointing to that and let's place my risk at 103, and then suddenly you say, hey, the pools don't work. No, that is you contributing to market maker to thinking, oh, we might as well take 103 first and then we go for 111. Looking at the past 3 months, this is how it's looking now, with liquidities increasing at 113 as well, and the last 30 days shows that 103 now flips again, not being the king. That means that new shorts have also entered, placing again their risk at 111, or maybe some longs close their position, reducing this pool. Let's look at the monthly on fire charts, and now the brown wells are pointing down. Everything is pointing down except for the 1k to 10k that is kind of buying the dip in this area. Purple wells, no signs from them. Those are the ones that we care. They should come back into the market, showing that there is something brewing big to the upside. The price spoofing is still located at 110 now with 56 million. We can start looking at the order book on Trading Light. You can tell that once the price wanted to break out, they immediately put some bands at the top and at the bottom to keep the price just in this range. Big support is at 106 according to Trading Light. Let's go into Bookmap, and remember that there's the last 2 days of the promotion on Bookmap to get 50% discount to access this amazing tool. I will say that all the orders that are below the price are spread out more evenly, but now there is a lot of support to the downside. That resistance is very constrained, very close to the price. As you can tell there is 397 and 165 versus little, very close to the price, holding the price. But if you go lower, there is a lot, and that is gonna show up when we go into high block capital and we look at order depth, bid ask ratio. Both are gonna show that multiple percentages of deviation, the orders to buy are currently winning. If this is confusing you, there is a ton of support currently sitting in the order book, more than resistance. Resistance there is, it is significant, but it's just very close to the price. CBDs are now in the negative. We'll look into more detail as well when we get into high block capital. CBD is aggressive market orders currently entering and getting executed immediately as they hit the market. The Bookmap sell started on the 4th of July and it ends on the 11th of July, so you still have 2 days and 12 hours to get advantage of this tool. To get access to it, there is a link in the description, or you can also use this QR code that now is appearing at the top of the screen. It's also pretty clear when we look at Market Monkey Terminal what I was saying before. Loads of orders spread out a little bit lower than the ones that are resistance. Resistance is heavy, very close to the price. We could think of it as if we manage to break 109.5, there is not much resistance going up, but we could also say that the support immediately next to the price is not very strong. It gets stronger as we get into 107.8 or 106. That is pretty much the same I'm seeing on Bookmap, but in this case Bookmap is aggregating Binance Futures, Bybit, OKX and BitGet all in the same view. It's very configurable. Now looking at High Block Capital, you can tell that all the bands of bid versus ask ratios are at the top end. This includes the red one 0 to 1%, the green one 5 to 10% deviation away from the price, and the yellow one 1 to 5%. So in all deviations below the price, there is a ton of orders that relative to the same deviation to the upside, they are winning. Funding rates yesterday were in the negative. Interestingly, those were aligning with the highs of the price. If you look in here, for example, negative funding rates in here, that means that they were shorting a lot. Typically when that happens, the price goes even higher. But actually the alpha is if price goes lower and you get negative funding rates, you are trapping late shorts and then price reverses back up, producing a local bottom. When you are at the highs and you get negative funding rates, well, then the alpha is a little bit more diffuse. In this case, you can see that they managed to get away with shorting the price a little bit. Shortly after, the negative funding rate went away and it turned into quite positive, which means that we have plenty of longs in here. And you can tell how the heat map has shifted from being at very low percentiles of defense from the longs into quite light in this area. 10% and 5% have pretty decent defense, followed by 1 to 2%. And the delta now shows the longs at higher risk. In terms of CBDs on High Block Capital, everything looks very flat, so I'm just gonna skip it. And in terms of fair value gaps, this is ridiculous because we just produce fair value gaps very close to the price. We take them, we leave some 2 below, we go back down, we create 2 more up and we go up. We're just going sideways and not going anywhere. And this is something that you shouldn't overlook. This is the perfect recipe for a squeeze, right? We are building a squeeze and we need to monitor whether this is actually gonna make a big move in the next days or possibly next week. Nasdaq and S&P are looking in the positive on pre-market prices. The fears continue towards the tariffs. The discussion is all around those topics. Gold could potentially put a new low in the momentum this week, continuing with the reset of the momentum while the price is just going sideways. Since the RSI went into 80, technically this is 2 things. And this is one of the more interesting discussions to have, which is in here we have a bearish divergence. And the bearish divergence can be challenged by the price. And there is a recipe to do that. What I mean by challenge, it means not playing out, not breaking down as you would expect from a bearish divergence. And how you do that? Well, there is one component, reach a very high level of RSI. For example, in here we reach 80, almost 81. Second, produce the bearish divergence. We have it. 2, let the price just go sideways and reset the momentum into a cool down. Get into around 50, 60s, no lower than 40s. And then from there, do a bullish continuation. The main condition is that this turns into a reset and bullish continuation in the context of a bearish divergence only if the bearish divergence happens at very high levels of RSI, which in this case we have it. Does that guarantee the bullish continuation? No, nothing guarantees anything in all the world of trading, but initially I was very convinced that the bearish divergence was gonna get us into lower lows, but now I'm starting to be open to the idea of a bullish continuation since the price hasn't moved anything since we put the bearish divergence. And clearly Nasdaq and S&P have slowed down right after the breakout. So now what we need to monitor is if we retest the breakout or if we produce a deeper correction. Remember that on the 2 weekly, we are in the territory of a rejection for the S&P. And that's something that I will continue to monitor because that could spell a bit more than a shakeup in crypto markets if it plays out. Now let's go into altcoins because I promised I was gonna cover that. We are seeing some good decent moves, some double digits, but you know, just mildly solidly green at the moment. And what I care is that the USDT plus USDC dominance against the total 3 dominance is still within the channel that says we are still in a bull market. If we cross this from the top, we exit the pattern and then we enter bear market. So far we have had a good decent rejection from the top line, meaning that we are still inside the pattern, and that is okay. Now, ideally, if the RSI comes back into support, then we're gonna see this going lower, and that should bring some performance for the altcoins. Of course, if we do a fake out in here and suddenly we exit from the top, well, there you go, we enter a bear market. Now, the Bitcoin dominance is supporting the idea of a rotation into altcoins. That is because we are now going and accelerating after having confirmed on Sunday a second layer breakdown on the Bitcoin dominance. The first one occurred on the 28th of April. Then I speculate that we were going to find a top at 71.81 on the RSI. We hit that level just millimetrically close, and now we are accelerating on the second layer, move down. We put a bearish divergence again. So we have a good technical setup for a breakdown. And I'm just going to play devil's advocate in here because way earlier in all this uptrend in here, we have had similar technical setups that didn't follow through with a move down that we actually called and we were wrong. So I want you to be fully aware. Let me show you where. In this area in here, we have a breakdown, right? We have a breakdown of the RSI. We break down, then we have a revenge rally into new highs on 76 here, and then we carry on going higher with the momentum resetting, and nothing follows through with what was promised with the breakdown, which is to break the support and enter into an altcoin season. So this is very promising. Everything technically speaking is pointing towards a move down of the RSI, possibly into 62, hopefully into way lower if we break the global support. Let's say we go into, I don't know, 20, 30 RSI. That will be fantastic for the altcoins, but just leave some headroom for the technical setup to fail. I guess that is an advice in general for any technical setup, not just for this one. After all, there are no forecasts. There is no forecast here. There is just a scenario that is giving us better chances than in all this range from pretty much from here to here. Now we have the highest likelihood of doing that, not the certainty. You will never get a certainty, sorry. And on the USDT dominance, you can see that we are following through with the fractal. We went up in here to 5%, we went into the line, and I say this move into 4% from 5% should be a good decent move that belongs in the past cycle to some decent moves on the altcoins as well. Something else to consider is that in all this period, March, May, July, we've been pretty much all the time within a Bitcoin season. Bitcoin season means that Bitcoin is outperforming in the past 90 days most of the assets. We're talking about all these different coins that are below BTC. BTC is outperforming. You can see their performance in the last 30 days. Wow, many usual suspects that I'm constantly doing TA, they are well in the negative in the past 30 days. And thanks to that, you know, we've been in Bitcoin season. And just on the 7th of July, we exit Bitcoin season for a lapse of time. Of course, to go into altcoin season, first we need to hint that we are exiting Bitcoin season, testing the sentiment and seeing if we can do a ride all the way to 85. If you are allocated already in Bitcoin season and you hold into altcoin season, that's how you experience the best, you know, results. But of course, if you allocate too early in Bitcoin season and things continue to fall and fall and fall, and then you run out of cash, which is the case for a lot of people out there, it is what it is. So let's do a wrap up with Bitcoin and then I let you go. Something I wanted to mention about our sponsor 2bit, the exchange non-KYC, is that in the trading station you can see actually if you are in profit, which is something that you take for granted, but most of the trading platforms do not offer. They show you that you are slightly in green or in break even, but then you close the deal and it is a small loss. Why is that? Because they don't bake in the fees when you're trading. 2bit doesn't do that to you. They make it easier. When you see green, it is green because even in the floating PNL, you see it with with the fees already discounted. If you sign up for 2bit, you get automatically $50 in your account. That's even before depositing. Now, if you deposit, you can get up to 30,000 in bonuses. This exchange operates globally. It takes minutes just to register. You don't need KYC. You get access to leverage, 1,000 trading coins, 11 supported languages, and it was built by the people that built Bybit. So it's very user-friendly and they incorporate loads of different tools to make it easier for you. So here is the summary. I'm waiting for a better opportunity to enter either on a long or on a short. I will let the market tell me when is the best opportunity. So far, we seem to be in a squeeze and starting to future read to try to forecast at this point in time when everything seems to be in a pressure pan is not a great idea in my opinion. I am really picky, you know that, and that's the only way I maintain a consistent win rate. The first checkpoint for me is to find an area of support or significant resistance, and then I go through the data, and if I see something that is really attractive, I'm gonna let you know. Of course, if you're part of my Patreon, you are always going to be spoiled and learn first with an email sent to you from Patreon straight to your inbox. Don't join my Patreon, just go to my Patreon and browse old articles where I did that. Most of them go public right after I take profits for full transparency, so just have a look if that works for you. I don't trade very often, so don't expect that every day I'm gonna tell you enter here, exit there. It's not a signal. I'm not expecting anybody to copy me. I'm expecting people to use that information to learn and to contrast with their own ideas. If you are a beginner and you're expecting just to copy me, it's not gonna go well. I'm guaranteeing you that. On the daily, I'm seeing as well a breakdown, but the weekly is looking strong and we have all that liquidity on the top end. So as much as it is very tempting to enter the short right here on the breakdown on the daily, on the 15 minutes, on the 4 hour, I suspect that we could be seeing the liquidation of these dudes within 7 days, in which case I'm gonna take action. Thanks so much for watching. I'll see you on the next one. Bye bye.